Well, holy smokes, ladies and gentlemen, thought the trade war was over. Think again. Donald Trump has some news for us over this weekend to spoil your weekend. Now, is it going to spoil trading in this upcoming week for this market? How are these new tariffs, yes, new tariffs, going to impact stocks? We'll talk about it in this video. I also want to discuss your catalyst lineup for this upcoming week and some of the events that we are going to have. So do me a quick favor, ladies and gentlemen, before we get rocking and rolling, hit that like button and subscribe to the channel if you guys have not done so already. Check that link out down below in the description of today's episode. And let's begin. All right, so Donald Trump says we have subsidized Denmark and all of the countries of the European Union and others for many years by not charging them tariffs or any other forms of remuneration. Now, after centuries, it is time for Denmark to give back. World peace is at stake. China and Russia want Greenland, and there is not a thing that Denmark can do about it. They currently have 2 dog sleds as protection, one added recently. Only the United States of America under President Donald J. Trump can play in this game, and very successfully at that. Nobody will touch this sacred piece of land, especially since the national security of the United States and the world at large is at stake. On top of everything else, Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland have journeyed to Greenland for purposes unknown. This is a very dangerous situation for the safety, security, and survival of our planet. These countries who are playing this very dangerous game have put a level of risk in play that is not tenable or sustainable. Therefore, it is imperative that, in order to protect global peace and security, strong measures be taken so that this potentially perilous situation ends quickly and without question. Starting on February 1st, 2026, all of the above-mentioned countries, Denmark, Norway, Sweden, France, Germany, and the United Kingdom, the Netherlands, and Finland, will be charged a 10% tariff on any and all goods sent to the United States of America. On June 1st, 2026, the tariff will be increased to 25%. This tariff will be due and payable until such time as a deal is reached for the complete and total purchase of Greenland. The United States have been trying to do this transaction for over 150 years. Many presidents have tried, and for good reason, but Denmark has always refused. Now, because of the Golden Dome and modern-day weapon systems, both offensive and defensive, the need to acquire is especially important. Hundreds of billions of dollars are currently being spent on security programs having to do with the dome, including for the possible protection of Canada. And this very brilliant but highly complex system can only work at its maximum potential and efficiency because of angles, meets, and bounds if this land is included in it. The United States of America is immediately open to negotiation with Denmark and or any of these countries that have put so much at risk, despite all that we have done for them, including maximum protection over so many decades. Thank you for your attention to this matter. That makes a little bit more sense, right? For the whole purpose of the Iron Dome, right? Be able to shoot down any missiles in the event that there were to be some kind of war. It makes sense why Trump does want Greenland for a national security perspective when you think about the Iron Dome and put that into context. Now, we're not a political channel. Okay, but unfortunately, politics tend to move markets a lot, especially tariffs. We know that 2025 taught everyone that. So this is a 10% tariff. Okay. Now, I don't think it's necessarily the tariff that is the bigger problem to the markets, believe that or not, at this stage. I don't think Denmark, Norway, Sweden, France, Germany, the UK, Netherlands, and Finland are that important for trade. Okay. Collectively, Europe's like our 4th largest trading partner, including like all the countries. Right? China is the most important. Canada and Mexico are more important. And I believe, without looking at the actual numbers, the collective of Europe would be 4th. Okay, 3rd or 4th for sure. So is it that important? No. But this probably raises the probability of a Greenland deal. Okay, this probably raises the odds that we actually do buy Greenland. That is more negative for markets than the tariffs. How is that more negative for the tariffs? Well, America doesn't exactly have the best fiscal position right now. Okay, it's been deteriorating since Clinton. We all know this. Well, 10-year treasury yields. Okay, 10-year treasury yields are sitting at 4.227%. They were up almost 7 basis points on Friday. And maybe Wall Street kind of had an idea this was coming. I mean, that makes sense now that the news comes out on a Saturday. And yesterday, 10-year treasury yields went up so much. But the odds are definitely going to go up that we actually get Greenland. The government would have to issue, estimates are between $700 billion and $1 trillion to actually purchase Greenland. Okay, so they would have to issue a ton of bonds. Well, but when the government does that, they're selling bonds. They're putting selling pressure onto the bond market. That drives typically bond prices down, which drives yields up. So yields could just go up. You could have a blowout of 10-year treasury yields. That's the risk here. The risk is not tariffs are going to cause inflation or tariffs are going to cause a recession. That's not the risk here. The risk is if Wall Street really thinks the government's going to have to, issue $700 billion, $1 trillion of additional bonds, you're going to have a severe supply-demand imbalance here. Okay? And you could have 10-year treasury yields that hit 5% on this. Now, that's what could cause pressure in the markets. Now, I don't know if, coming early next week, this is going to necessarily be something where 10-year treasury yields go to 5%, right? But if the actual purchase of Greenland does go through, that's where, it becomes a slipperier slope for this market. But I don't think the tariff in and of itself is that big of a deal at this point. Okay. I think the markets are over tariffs. Now, the 7 basis point rise, almost 7 basis point rise in 10-year treasury yields, I wonder if this news is already priced in. Okay. But again, you don't know that until you start a new week, until you actually start trading. So you're in a precarious situation at this point. Okay. Again, the bigger problem is actually buying Greenland for this market. It's not like we're running surpluses out there. Like the government would have to take on a lot more debt rapidly, and that would be a problem in the bond market. Unless there's some other way that, this is going to be financed. Doubt it. But if there was some other way, that would be a better, outlook for markets. So the real issue is not, again, tariffs or recession or inflation from tariffs, from 10% tariffs on basically Europe. It is 10-year treasury yields. 10-year treasury yields, when they go up, it makes it harder for small businesses to get capital. It makes it harder for people to buy a house or buy a car. It, a lot of quote unquote zombie companies really come under a lot of pressure. Like if you are unprofitable and, capital just becomes out of reach, that is how companies go bankrupt. So that could be a larger issue for the economy, but it's, it tends to have a direct correlation to the stock market. 10-year treasury yields go up, stocks go down. Now, Friday, a little bit different. Yesterday, some stocks did really well. Some stocks did poorly, even though 10-year treasury yields were up 7 basis points, which is a huge move. Now, again, some of this might have been priced in as a risk on Friday. So maybe 10-year treasury yields only go up a couple of basis points on Monday. But it's definitely going to put some pressure on markets to start off next week. Now, I don't expect that we're going to wake up to a deal done on Monday. That's where the whole bond market blowout could be a little bit more extreme. This could take some time. So it could be something that's with us for a while and something we have to kind of watch. You know, in markets and investing, I try to really differentiate between what is actually a catalyst for markets and what just sounds bad. Tariffs just sound bad. Is it going to cause inflation? No. Is it going to cause a recession? No. It's not a catalyst in the grand scope of things. Tariffs are not going to impact earnings enough to actually feel them. Okay, not tariffs on Europe anyways. Okay, so when you revert back to stocks ultimately move on earnings and earnings expectations, 10% tariffs are not a problem. But the cost of capital rising because of buying Greenland could have an effect on the economy, which 80 to 85% of company earnings are derived from the economy, meaning economy is doing good. 80-85% of companies' earnings are going to be doing good as well, right? It's simply put, they tend to follow each other. So a rise in 10-year treasury yields could put pressure on the economy, which could put pressure on earnings. That is actually a market catalyst. Now, in this upcoming week, we are going to have some earnings as well. You have 3M earnings, a bunch of regional banks on Tuesday, really Wednesday and Thursday, as well as Friday, tons of banks. But again, you do have 3M. You have Tuesday and after hours, Netflix and United. Those are going to be important as well. Johnson & Johnson, Halliburton, Wednesday pre-market, Kinder Morgan Wednesday and after hours, P&G Thursday morning. Tesla should be reporting this week as well. I don't know when that's going to be. They haven't actually confirmed that, but typically they report in the same week as Netflix, so keep that in mind. Thursday, you're going to get Intel, Intuitive Surgical, Capital One, Alcoa. And then Friday, you get SLB, Ericsson, and, Boots, Allen Hamilton, and a bunch of, again, smaller banks. So this week, you start to get into some bigger earnings the week after. So the following week is when you're going to get your big tech earnings. I think earnings are going to be great. I think they're going to be just fine. But again, in the short term, markets don't move on earnings. Short term, markets move on fear and emotions and headlines. Longer term, medium term, the markets move on earnings, right? But short term, it's all about fear. And again, that's why I've always tried to differentiate between what is actually like bad news and what's just short-term emotional news. Like tariffs, short-term emotional news. 10-year treasury yields going up significantly from here from a Greenland buyout could be medium-term, like a bad catalyst for this market. So yeah, we're really going to want to see how markets respond to this news. Upcoming week, we really don't have much in terms of broader market catalysts from economic data. We've gotten our jobs report. We got CPI. We got all of these things. But we do have on Tuesday, ADP employment change weekly. On Wednesday, we have pending home sales, construction spending, some smaller data sets there. Thursday, we have core PCE month over month for October and November. It's behind, it's delayed. We're expecting good numbers here. We've had CPI come in better than expected now 3 months in a row for October, November, December, right? I don't think this is going to be a huge catalyst. You have personal income, personal spending for October and November as well. Again, just very delayed data. Unless there's some kind of big surprise, I don't think markets are going to move really on that. And then on Friday, you have S&P Global Composite PMI, Manufacturing PMI, and Services PMI for January. So you really don't have any economic data that's going to move this market in any kind of big way. It's all going to be on tariffs. It's all going to be on headlines. It's going to be on this Denmark situation for next week. And what's interesting about right now is the setup for 2026 looks really good, right? AI is alive and well. I mean, it's continued to thrive. AI shows no signs of slowing down. AI adoption, application, data centers, literally everywhere you look, AI is alive and well. The CES Tech Conference in Las Vegas, NVIDIA had great things to say. AMD had some crazy things to say. AMD's CEO said AI training compute's going to have to 100x in the next 4 to 5 years. you are barely scratching the tip of the iceberg here, right? Like, the best is yet to come. The consumer is going to be getting stronger this year. Big, beautiful bill, no tax on tips, no tax on overtime, being able to write off auto loan interest, changes in the tax code for corporations to be able to invest more. Real estate should begin to pick up a bit. Okay, that also helps household balance sheet. People can, sell their home, buy a new home, and keep more equity to themselves in their bank accounts, be able to spend more, right? So generally, better economy, stronger consumer, inflation. It's that time of the cycle where inflation went up a lot. Now it's coming down a lot. I don't think that trend is going to change. We're looking at 1 to 3 rate cuts this year, somewhere in that ballpark. New Fed chair in May. That's more bullish. I mean, we thought the trade war was over with. So, the setup looks really good across the board, but then you have this. Then you have this situation, which, again, if there's some way to finance this that doesn't involve selling a bunch of treasuries, that would be great. Like, if all the billionaires in the world wanted to, chip in to, help buy Greenland or something, there could be some crazy deals worked out here or there for Greenland. We'll see what the price is, but the estimates I've heard, $700 billion to $1 trillion or more. That's just really like almost impossible to do in the bond market. We're already running over a $2 trillion deficit, like $2.5 trillion. You're going to add $700 billion or another trillion to that. And bond investors are going to freak out a bit. The bond market's going to revolt. It's going to puke. Okay. And that is not typically a good thing for stocks. We'll see. I mean, there's a lot of natural resources in Greenland, but we wouldn't be extracting those anytime soon. The government wouldn't be selling those and bringing in revenue anytime soon. So, yeah, again, tariffs, not a big deal. This is a much bigger issue for the bond market. While I don't think this is going to give you a crash, it's definitely something we want to watch to see how the bond market reacts to this and how stocks react as well. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel, especially, again, because we don't have too many other catalysts. I should also mention, we have, before we wrap up this video, we have the Supreme Court ruling potentially on tariffs on Tuesday. So that's going to make things a little bit more interesting. Now with these new tariffs, I don't know how you justify those as legal. I think anyone would think they're not legal in the framework of how Trump is using them. But hey, what do I know? We'll just have to see what the Supreme Court says. That could be on Tuesday. They may or may not rule on tariffs. There's one ruling on something. We just don't know exactly what that is. So minus that, if we don't get the Supreme Court ruling, you have Netflix earnings, you have United earnings, and basically this whole Greenland drama to look forward to this upcoming week. So again, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. Have a great rest of your day, and I will see you in the next one.